What up, guys? Let's get this done so we can all go and enjoy our Valentine's days. All right, starting with Monday. Um, I think the setup for today is going to be the 1 minute here, even though it's technically invalid. I really like this V shape off open, and I really like the Judas swing here that we tap into the. I think it was a. There's a 1 hour there and a 4 hour, so we're still in this 4 hour. So yeah, I think I think this is gonna be the setup for Monday here, and I guess we'll just say like that's TP. So I will mark it out as such. We'll say this is A plus setup, invalid of ITH. Um, good momentum, singular gap, 4 hour delivery. Reshape, Judas off open. What else? I mean, good session liquidity. Session liquidity. No roadblocks. And what else about this trade? That's going to be it. All right, let's go Tuesday. What is ITH? ITH is just a short term for internal high. So an internal high is a three candle pattern where we have a lower high, higher high, and a lower high. And anytime we have an internal high that's at the swing high of a inverse for value gap, if we sweep out that high, that makes the setup technically invalid because this is supposed to be our break-even point. But in this setup, we can use subjectivity to recognize that the setup here is very V-shaped. We had a very good reaction to sweeping liquidity, and we had very good delivery. So this is still a valid or like a good setup, even though mechanically it's invalid. And our priority as inverse traders is to prioritize subjectivity over being mechanical. And this is a good opportunity to prioritize that subjectivity. So let's go to Tuesday. Tuesday was kind of bad, right? Let's see here. Oh yeah, we had the 30-second long though. So this will be our setup. Um, I don't know. I'd say this is like A, I guess. This week was actually really good. What was it? The 4 hour there again? Yeah. Yeah, it looks like 4 hour gap. Um, we could say like CISD. Um, okay, let me see. Anybody know the indicator that's showing the time frame ticker at the bottom? So Yeah, I think this is just the trading view settings. Yeah. What else? What's our draw on liquidity here? I guess we could see like Asia highs or previous day high. Yeah, previous day high. I mean, yeah, that's good to me. Oh, good break even, I guess, too. All right, let's go Wednesday. Tom, 99% of the time you're gonna take the 30-second. The only time you're gonna take the 15-second is if there's no 30-second or 1 minute, and it's a very textbook looking setup coming off of the higher time frame. That is the only time you're gonna be looking at the 15. And I only use it every one in probably 100 trades. But I don't take it too often. Okay, Wednesday was our big dump day. There wasn't really anything too textbook. We had those equal highs above, but the equal highs aren't that important. So maybe we use a pre-market trade. What do we think? Maybe this 30-second short up here. I don't mind it. Would have been a break even after running this slow, but could have scaled. Any other trades from Tuesday, guys? I think this was a break even trade. I think I'm gonna have to go with that 30-second. Did I get anything from Tuesday? Or not Tuesday, sorry, Wednesday. No. So yeah, we will say this 30-second short. I will give it like an A minus setup probably. Hmm. What else? I mean, what we swept previous day high. What about our sell side draws here? I mean, not really any good sell side draws. I guess like unfilled. There's probably a 15-minute, if I had to guess, that we could have targeted here. Yeah, unfilled 15-minute here is target. I think that unfilled 15-minute had a devil's mark too. Okay. I think that's going to be it for this one. But yeah, sometimes there's just not really that good a setup for the day, and you kind of have to force it. But this setup's fine. These last two setups are going to be really easy for us, Thursday and Friday. Oh, I guess this was a break-even trade too. Yeah. Ah, well, too late. Yeah, this is a break even. Devil's Mark is just like a flat bottom or flat top candle. What makes the equal highs C grade? The equal highs don't form at swing points. So if we look at the 15-minute here, we have this swing high here. But if you look here, is this a swing high? No, this would be our swing high, right? So you typically want your equal highs to form at swing points because a swing point acts as a liquidity pool, whereas a random high doesn't. And you know that because a swing high is usually where stop losses are going to be at. Not right now, Batman. But basically, just don't do it. How do you decide? Yeah, I already gave the answer for that one, Tony. I basically said that the only time you should trade the 15-second is when there's no 30-second or 1 minute entries, but all the criteria for the entry is present, and we're delivering off the higher time frame. So I don't really use the 15-second too often. It's like only 1% of my trades. Okay, Thursday. Oh, yikes. Thursday was kind of bad too. I forgot. So we're bearish coming into open because we have this 15-minute inverse and we're respecting the 30-minute. So with that idea in mind, there's no real inverse on the lower time frame here to get short off of. So maybe this one, we kind of generate this LRLR here. We still have the sell side draw this previous day low. So yeah, I'll say this. This is like another A minus setup because it's in discount. Delivery from 3-minute built liquidity inverse significant gap. We stay low. Good momentum. Outside macro. Senior gap. Anything else? That's it. Would you call the wick a rejection block? Sure. Rejection blocks are kind of hindsight. I don't really use them. And then there, and then we want to target previous day. But yeah, the 3-minute there is our delivery, so that's why this trade's good. Bearish order flow is still present. So that'll be this trade, and then I want to do a little review of PM because PM actually had a nice setup. I just have to find it. So my goal for PM was to manipulate the high and tap into this 1 hour bearish gap, and then I think get a short. But I think what we did during PM was we took, oh yeah, we took the short after. That's right. Okay, because we wanted this low ultimately. I thought that we could go for this, so we took this short here. When we violated this 2-minute BPR, we put in the bearish OB. I don't know. No, sorry, it was this one. Yeah, it was this short here. So when we violated this 2-minute BPR here, put in the bearish OB, good momentum, and then we scaled at this low and these lows. Because the thinking here is, okay, we swept lunch highs, we had a very bearish reaction to it. We delivered out of the 1 hour. And then originally we wanted to take, I think it was like this 30-second, but we got break even on it. There was like some inverse. Yeah, yeah, it was this one here. We wanted to take this. This was my condition for becoming bearish for lower because if you can see here, this 30-second gap is respecting price, and we sent price to a higher high here. And so once we broke this, I knew that we would become bearish. And oh yeah, now I remember. This candle knifed through everything, and so it went invalid. And so then we had to use the next best thing here, which was this 2-minute BPR. And we knew that if this 2-minute BPR broke, we would head to this low. And the chances of us breaking this 2-minute BPR became higher because when we run this low, there's a chance that like time aligns with price and we close through it. And we go break even here because we don't know if this BPR is going to break. So pretty quick break even, but obviously it worked. And then, yeah, we ran that low. So I like this setup. And then final trade from Friday is going to be that 1 minute long. So this 1 minute long was obviously very A plus. Just insane momentum, insane V shape, Judah swing, everything. So A plus setup. Delivery off 4-hour V shape. Really strong momentum. Judah swing. Asia high. And then there's obviously more draws, but that's just the one in the short term. What else? It's kind of like AMD, right? Oh, end of 3 drives too. 1 drive, 2 drive, 3 drive. Left relative equal highs, so there's like relative equal highs too. That's it. Okay. What makes it setup A plus 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 instead of just A plus? This setup is just the reason why was because of momentum. And the dead eye. Yeah. Okay. Wasn't the iFVG on the 30-second more obvious? Probably. But the entry went break even. You could have used the 30-second or 1 minute there. It's like the same. Yeah, Gabriel, that 2 minute to the downside isn't good. Um, yeah, sell side was taken, and the other reason why was because if we think about draw on liquidity here, in terms of relativity, what seems more significant, the unfilled 4-hour here and the high inside the gap, or resweeping sell side after sell side's already been taken? Probably this, right? So we need to see price hit that before reversing, which is exactly what happened. And yeah, this is also protected. But it wasn't protected at the time. It was only protected, I think, on the 15-minute, but in the hourly, it wasn't. We needed to wait for the hourly to close to create the ITL. 3 drives pattern is just this tendency for price to sweep liquidity 3 times before reversing. It's in the 2022 mentorship. Oh, trade. I literally just explained it. Like that was the last thing I just said. I just said it. It's the tendency for price to sweep liquidity 3 times before reversing. It's something that's mentioned in the 2022 mentorship with ICT. If you want a more in-depth explanation, yeah. What makes a low slash high unprotected? If we take out the swing high of the swing that makes the protected low. So in this case, it would be this high. So once we take this, it's no longer protected. It's just high resistant. Uh, the way that I play stop losses, Otigos, with this model is I size for the average stop loss of each trade, and I have a hard stop at the swing high or swing low of the iFVG model. So, what was a good one? Because this one obviously is going to have a very big stop loss. And then there's other ways that I also manipulate the stop loss because there are going to be conditions that we create on some inverses that it wouldn't make sense to violate in order for us to remain bearish. Like we'll create like bearish order blocks paired with FVGs that shouldn't be violated if we're to remain bearish. So in those cases, you could put your stop loss at like the swing high of the order block, stuff like that. But let me just get one example out of the way so you can see what I'm talking about. Okay, so let's say we're taking this inverse here, okay? And your entries here, your break evens, I guess this swing high or this one, depending on whatever. And the worst possible stop loss is going to be here, and the best possible is going to be here. So 37, 54. So what I'm going to do when I look to size this position is I'm going to cut the difference between the two, which is going to be at about 45, okay? And I'm going to size my trade to 45 points. So that's going to be about, $100 per micro. So depending on how many micros and how much risk you want to put on the table, you size that many. If I'm doing 200 risk, then I would do about 2 micros. And worst case scenario here, okay, it hits the full stop loss, I'll lose $220. And best case scenario, I lose 160, okay? And so over time, the average stop loss is going to work out with your sizing so that you'll end up sizing about your risk. And I'm always going to have a hard stop placed here at this low because if we violate this low, then clearly we're just wrong about the trade. And so that's essentially how the stop loss for me works in this model. We have a hard stop loss and a manual stop loss. If we reviolate the iFVG, we're clearly wrong about price, and so that's your stop out. You don't have to wait for the swing low to hit. Does Dodgy use it this way? I don't know, but that's the way I do it, and it works for me. So, obviously, there will be some discrepancies with this because sometimes we'll create order blocks on the way to the inverse in some trades, and with those order blocks that are created or other inefficiencies, you can treat them as like conditions that shouldn't be rebroken in order to remain bullish. And in that scenario, you can put your stop loss above or below those conditions. The difference between a protected low and a high resisted low is the protected low just meets like the definitional criteria of being protected, meaning we didn't sweep out the conflicting draw above or buy side. But the high resistant low is essentially, okay, there's still buy side above. We swept out the immediate buy side that needed to be hit for it no longer to be protected, but there's still buy side above and there's no sell side below because we've already ran sell side several times. So when we want to resweep out this low, we need first to sweep out buy side, like in the conflicting draw. So let me mark this out. So protected low meets definition for being protected. Swing high of swing that creates protected low is intact. High resistant low is whenever price takes sell side and we have conflicting draw Does that make sense? The reason for the 2 minute short filling is because this low is still high resistant and we still have buy side above. We have the unfilled 4 hour here that needs to be taken and addressed before taking more lows, right? And the other thing is too, order flow actually never became bearish on this 2 minute inverse. Mechanically, it was a very good setup, but we still have like this 1 minute gap here holding, and then obviously this one here. So you can treat this whole entire swing here as one big gap in series, okay? Because there's a way that I can manipulate the time here to show like, um, I don't know, like there being a fair value gap here that, you know, maybe isn't present on the 1 or the 3 or whatever. See? So if I switch to the 45-second time frame, you see all these fair value gaps? So we're not actually bearish yet. The only way that we become bearish here is if we inverse all of these. Okay. A projected high is also a rejection block. It can be. It can become one. But the only way that we know a rejection block is after price taps it and then rejects off of it. So it's like to me it's just another like hindsight confluence. It's like, okay, cool. I guess that was a rejection block. Yeah, you wanna avoid trades that target protected highs or target protected lows, for the most part. I mean, if it's a protected high or protected low, that just means that it's not a good draw on liquidity. And when you try trading without good draws on liquidity, they end up being lower probability. So I would just keep that in mind. Okay, I think that's going to be it for iFVGs of the week. I'll get this video uploaded shortly so you guys can review it for your notes. And I hope you guys have a great Valentine's Day and a great rest of your weekend. I'll see you guys on Tuesday since the market will be closed on Monday. And yeah, I guess peace out. Protected high. I don't know what happened to it. I lost it. But yeah, it'll be in the video, Gabriel. Don't worry. All right. Peace out, guys.